Good evening, traders. It is Tuesday, August 10th, 2010, and today was the FOMC meeting day, and Bernanke announced that they're going to roll over some of the debt buying programs into others, and that wasn't really fully expected. The markets seemed to like the news because we were trading down pretty big, and then we got a rally towards the end of the day. We weren't really down too much. As you see here, the first chart I'm going to analyze here is the VIX, $VIX. You know, it had another day where it tried to cross the pierce the 18-day moving average, and then it wound up closing below, only up 23 cents. This pattern has been going on for the last 3 or 4 weeks. As you see over here, after the second falling wedge, we had an attempt. I was actually short at this point. When I saw that we couldn't clear the 18-day moving average, I went up taking out of my shorts, went up going long. I really haven't been making out too well on my longs. Just the churn and stuff with the options, they really haven't gone. Stocks haven't gone up that much. They're up a little from where I bought them, but I'm down to flat, which is okay because right now it's it's summertime. The spring was pretty good to us, catching the sell-offs and the bounces. You have the MACD did cross barely, and as you can see here, you have had a positive divergence here on the histogram for a while. So that is the bullish. That's really the only bullish technical that's in the VIX. You have the stochastic; it's clearly embedded to the downside. You have it's 10 and 7. You have the black crossing the red though, and it is turning up now. And the RSI seems to have flattened out over the last week or so. We're clearly right now we're clearly at an inflection point in the market, and I'm going to pull up the SPY hourly, and basically this thing is going to break one way or the other. I believe we're still going higher in the near term. Here's the chart that I'm talking about. You can clearly see the uptrend line. It was actually violated earlier in the day. Then we rallied, almost touched the 113 area on the SPY, and then pulled back. Wound up closing at 112.38. So I think that may be outside of that uptrend line. Not sure, but as you see, where the two lines are converging, the uptrend line and the resistance at 113 is clearly converging. So something's going to hit the fan here. You can clearly see the MACD. You have lower highs creating a negative divergence, but then you have higher lows. So you're squeezing. The market is squeezing in together, and even on the RSI, if you look at it, you have a similar pattern. You haven't had a higher high since the initial bounce to the 110 area. You haven't really come close to taking out that kind of strength. The bullish scenario right now is that you have the stochastic turn down a little more. It didn't get fully oversold, and it's turning up now. So the momentum is up on the hourly. So the market, I could see it opening. Right now I'm not sure what the futures are. It's 10 o'clock Eastern Standard Time. As I'm looking here, futures are actually down like almost 8 points. So there, possibly could be some a retest maybe overnight, and then maybe who knows what the future are gonna do between now and the open. I still like the bullish scenario. I think if you took out today's lows on a closing basis, I think you would want to seriously consider getting out of longs. And and I think if you cross 113.20, I think you would want to seriously consider getting out of shorts. So that's pretty much the scenario we're in right now. I mean, you might be loaded one way or the other, but something's going to crack, and it's going to be probably tomorrow. There's not too many times you can say that, but this is one of those times. You just had the news, and the market's got to absorb what Mr. Bernanke did. Me personally, as far as like for humanity, I think it's well, usually pretty much whatever the Fed does is bad. But I think if you have capitalism, you should let people fail and let new money come in, and start again. But that's not, unfortunately, that's not the way things are going right now. And we're talking about trading here, so you got to kind of play off what these clowns are doing. Yeah, you have the on the dollar index here. You had a nice rally today, and you had to sell off after the Fed meeting. And as you can see here, you pretty much gave up most of the day's gains. You have a mixed bag of technicals here because the MACD did reach a higher area than it's reached in quite a while. So this would be something that could give the bulls something to hang their hat on. You would like to see, if you were bullish, you'd like to see some follow through to the upside tomorrow. If you're bearish, I don't know if it's going to happen. Like I said, I'm still in the bull camp. Here is the actually, I'll look at a little bit better of a chart here. Here's the SPX. As you see here, we are maybe in a rising wedge here that could end at the 1140, 1150 area. The clear resistance is that 1132 area. Close at 1121. Stochastic is in overbought territory, but it is embedded because it's been up there for quite a while. You have the histogram has been ticking down for several days now. You had the high volume today, but you close near the top of the range, so you get the long tail again, which shows that there are buyers still coming into the market. And basically, like we're at this point now where the market's going to make a decision if it's going to break this area or if it's going to retreat and maybe make new lows or something like that. I don't think that's the case, but we will see. The silver market today, you woke up and I was just saying how we closed 6 days above the all the moving averages, but we still don't have the confirmation of the cross. See, the blue line is the 18-day, the green line is the 100, and the red is the 45-day. And we're above all three, but it's a very rare occurrence for several days now. The 18 is below the 100, and the 45 is above the 100, but the 18 is below the 100 and the 45. So that's usually bearish, but we're above all three. So it's giving you some mixed signals in there. You got the MACD is still above the zero line, turning up, and the stochastic is overbought at 75 and 76. It's not embedded. You're going to need some buyers to really step in here and propel this silver market, make the next leg up. And by that time, the MAC would turn up, and we could make a run at this 1975 area once and for all. Got to see if that's going to happen. If the dollar starts rallying, that can stifle this rally in the silver market. And silver's up, it looks like, a little bit right now, even though the market, the futures are selling off a little bit. All right, I'm going to try to do another video. Hang tight. It's going to take a little time, but trying to get back into the groove here, and hopefully this videos benefit myself and anybody that's watching.